This is our Forex blog for February 6, 2014, and a lot of people just want to trade with our new signals. They're very intelligent. There's probably 15,000 lines of code that analyzes all the swings, all the statistics of each currency. It finds, for example, if the euro is strong and the dollar is weak, you want to focus on buying it. It takes a lot of the guesswork out of trading. You can see the euro here. Starting off the day, we had a loss, small win, very small win, loss, big win, loss, loss, pretty much 3-pip loss, huge win here. It went from 05, got stopped out here, so I made 60 pips, loss, another huge win, medium win, 20-pip win, 10-pip win, pretty much break even, and there wasn't any trade since then. That's the euro. Here's the pound. Small win, decent 10-pip win, pretty much break even. You might have made 2 pips on that sell here. You made 5 pips here, shorted, made about 8 pips. It looks like you made 20 pips on that sell. Then you made about 15 pips here, 8 pips here, 10 pips, loss, probably 7 or 8 pip loss. Short here at 24, you get stopped out here, lost 3 pips. And the key to trading small losses, big wins. And normally we don't sell uptrends, but at statistically likely reversal areas or when certain patterns happen, we do. And I also, if we have a double bottom at the day's low, put in code that makes sure a certain number of pips elapses, time, or bars before doing any kind of counter trend. So if a very high probability reversal, double bottom happening multiple hours apart happens, our other signals won't even give sells. Obviously this is a downtrend. This normally would be a place to sell. Now if this low had gone underneath the previous lowest low of the day, then there very likely would be a sell right here. But because it double bottomed at the day's low, I have hold off code to prevent many trades that would normally be losers. There's very sophisticated trading methods and techniques in there. But anyway, if you don't want to take our signals, just an easy way of trading is just looking at our currency indexes. We created these, they're synthetic. No one else has these. And they basically show as a chart what all the dollar pairs are doing, all the euro pairs, yen, and pound. We pretty much pioneered comparing currencies statistics with our currency meters in the past, but it's much easier to actually see a chart. You can see double tops, double bottoms, trend line breaks. You can see if a currency's above or below its hourly moving average, plus our containment bands work on it. You'll be amazed to see how many times our white containment band ends price. Now today you can see of these 4, 2 of them went through it, but most currencies, most days are going to be contained by the containment bands. Probably 4 out of 5 days price really won't stay outside of these bands for more than 5 to 30 minutes. So if you see a currency that's strong, you want to buy it versus the one that's weak, and that's why we took this trade right here. We were short because the trend was down. The momentum and the buying picked up so much that we were forced to exit our short and flip and go long and catch this huge 60 pip win. I'm able now to find when extreme buying is happening within a bar. It's a secret I'll never reveal, but you'll occasionally see when we're short and all of a sudden huge buying comes in, our software will pick it up and it will buy and exit the trade, or if it's not in the trade, it will buy. This would have bought here no matter what, whether it was short already or not. So in a nutshell, using our currency indexes, you basically just want to buy the strongest currencies versus the weakest. You can see the yen. It clearly was trending up earlier in the day. It stayed above its hourly moving average, and at 9:10 broke down. That's weak. The euro was already up at that time, so let's try to find another currency to buy against that currency. The New Zealand, the weekly and monthly trend is up. A little bit after 10, it breaks out above its hourly. This one also, Swiss, is also way up, way past its bands. You don't want to ever buy a currency that's up this much, even if another one is becoming weak. So let's take a look at the New Zealand yen at 9, 10 o'clock. Very high probability buy. If you miss the first wave, you can always buy the next little pullback. So at 9 o'clock, you can see the New Zealand was on its way up. The yen really didn't show any signs of extreme strength earlier in the day, and then broke down from above to below its hourly. And anytime that happens after being above or below the hourly for pretty much 5 to 8 hours or 12 hours, you're going to get a big move most days. So you can see this breakout here at 83.40, and went up 100 pips in about an hour. Now that's a rare instance. Most of the time when that happens, you're only going to make 20 or 30 pips. This would be a normal profit somewhere around here. This is an obscene profit, which is the same with the euro dollar that we caught. But they do happen. When you get 30, 60, 100 pip moves, it really makes your week. And the rest of the time, you're just trying to grind out small 5 to 25 pip wins and keeping your losses, on average 3 to 8 pips. A lot of the times you're in a trade, you have an 8 pip risk. The trade starts to move your way, you move your stop up, you might only lose 5 pips or 3 pips. You rarely lose the initial full risk, unless the trade just doesn't work at all. So let's show one more example here. Here's a good example of a double bottom in the pound. It's underneath its hourly all day. Now, unfortunately, the weekly and monthly trend is just extremely weak, but you have a nice little double bottom here at 8.15. The dollar is weak, but it's also double topped here at 8.10, right? So you have a double top in the dollar, double bottom in the pound, and that's why this trade right here worked. Our signals that pick up this trade happen to just look at the day's low of this particular currency. He wasn't using the currency indexes, but occasionally, if you're doing the analysis of the currency indexes, you'll spot these trades. Double top, likely to go down. Double bottom, possibly could go up. This is extremely weak on the weekly and monthly trend, so it's not the highest probability trade, but it's probably 55 to 60% likely to happen. The fact that on this chart, it also picked it up, and it wasn't that weak at the time. Our day's double bottom low, separated by a couple hours, kicked in, and it's a pretty decent trade. You're in at 75, and you're out on this bar's close right here. You made 25 pips. You were short. You almost got stopped out, and then you got out here at 96. So you made maybe 3 pips, 2-3 pips on that short, and then you went long, and you made 5-6 pips on that long. It didn't really pan out. A lot of trades are going to be very small winners, but that's the nature of trading. Every once in a while you catch those 100 pip moves, or 30 to 50 pip moves, but the rest of the time you want your wins to average 10 to 20 pips, and your losses 3 to 5 pips, and you have more wins than losses, and that's the key to trading. You don't worry too much about the winning percentage. I mean, there's very few systems that are 80 or 100% accurate that try to trade intraday. I would say it might be possible to have a 70-80% system that traded over weeks and months, with very, very wide stops and very small profit targets. It's extremely possible to create such a system, but it's no fun to trade. I would prefer to be in 20 times during the day, be right 40 to 50% of the time, have a ton of small losses, break evens, and 3 to 5, 15 to 20 pip wins, and the rest be 3 to 5 pip wins. Then trade a longer term system. But that's just me. Everybody has their own preferences, and I created this system, and I auto trade this system myself, and in the software I release it as trading signals. In case you're wondering, we have no plans of releasing our automated system. It uses a broker that most of our traders would not be eligible for. It has high capital limits and a few other restrictions, but it's a huge task to write execution software. So we do not want to spend another 6 to 12 months of our time writing execution software for other brokers. I'm not saying we won't do that in the future, but right now the signals show up on your chart. You would manually place the trades, and wait for the trailing stop to get hit and manually exit the trade. But it sure beats spending 300 to 500 hours learning all the different methods that went into creating this system. Most people are not going to do the hard work and or be able to mentally keep track of dozens of different systems using a combined total of almost 50 indicators with different time frames, different settings. You're not going to be able to mentally keep track of that, but the computer can. It automatically draws fib targets, analyzes the waves. It doesn't do Elliott waves, but it does look for 2 and 3 wave patterns, which I found works extremely well, and it's very sophisticated, while at the same time being very easy for a trader to trade. You can put whatever other tools you want on here, and at some point I'm going to put in a tool here that will let you know what the last trade's pattern is called. When you add this to your chart, our new version will show you what's going on in the background. You can see this: ordering data, calculating swings, and then it will show you the percentage done analyzing the past bars and drawing it on your chart. That's a new feature we just put in last Thursday and Friday, and this week we spent some time speeding it up, making my code more efficient. And every time it updates this, it updates the chart, so that's why you can see the signals being put on there. So then it disappears when it's gone. I may in the future, if a trade is setting up or has triggered, let you know what the name of it is. If it's a Fibonacci based trade, probably like this one, and you're a big fan of Fibonacci's like I am, you might, it's underneath the 24% level here. You might want to take that trade, given the fact that the swing up before is 94 pips wide. It's very likely. And then you can see our fib targets up here. The fact that we have a sell signal, which very likely was based on the fib targets of this huge wave, you might want to take the trade. And it didn't pick up this one here, but you might also, knowing that there's a fib target up here, and this is kind of a mini it's not quite a double top in terms of what I look for, but you could also go short up here and make 20 pips on the way down.